Good morning, everyone, and welcome to Understanding New Jersey Disability Insurance and How You Can Save. I'm Vinny Civitello, Communications Manager for the New Jersey Business and Industry Association. With us today are Thomas Ficino and James Iannicelli of Arch Insurance Group. A few housekeeping matters before we get started. Today's webinar is being recorded and will be emailed to you tomorrow along with the PowerPoint for today's presentation, so keep a lookout for those. If you'd like to download the slides now, you can do so by clicking on the link in the Handouts tab of your GoToWebinar panel. I'd also like to draw your attention to the Questions tab. Thomas and James would be happy to take all of your questions, so don't hesitate to write them in as they come to you. So now let's get things started. Thomas?
I'm Tom Ficino from Arch Insurance, Vice President in our disability area, overseeing our disability products. And I'm joined today by Jim Iannicelli, AVP, who oversees all of our disability underwriting. So today we're going to give you an introduction of statutory disability in New Jersey, how it works and who benefits from this product, your options as an employer, and Arch's solution for NJBIA members. So currently there are 5 states that have mandatory disability. As you can see, California, Rhode Island, Hawaii, New York, and New Jersey. And this means that every employer in these states must have a short-term disability policy for all of their employees. So in New Jersey, this goes from your smallest size company to the largest that we have here in the state. So what is New Jersey disability? It goes by several different names. You'll see it called TDI for temporary disability insurance. You'll see it go by TDB or DI. So there's several different abbreviations it will go by, but it really all means the same thing. And that is, it's a partial income replacement coverage for employees who are unable to work due to a non-work related illness, injury, or disability. Now this is non-work related, so this is not workers' comp. This is really more off-the-job type of disabilities. So the benefit is 63 2/3% of an employee's average weekly wage, up to a maximum of $633 per week after a 7-day elimination period, with a maximum duration of running for 26 weeks. Now, this product is mainly used for maternity, so before and after childbirth. It can also be used for an off-the-job accident. You're skiing, you break your leg, you cannot get into work. That is another typical disability, or an extended illness, like recovering from a heart attack or anything else that would keep you from being able to work. So New Jersey employers have a choice. They can either shop in the open market for a private insurance through a private insurance company to get the best coverage and rate, or they can get their coverage through what's called the New Jersey State Plan, and that is essentially a kind of like a government-run insurance company inside of New Jersey. Now, in the state, 95% of all the employers are covered by that New Jersey State Plan, with only about 5% actually covered by private insurance. And we're going to go through that a little further on why there's that big difference there. But all New Jersey employers start out in the New Jersey State Plan and then have the option to move their coverage over to a private insurance carrier. Now, New Jersey does set all the rules on this plan, whether the coverage is through the state plan or with a private insurance carrier. So the benefit amount, the contribution rates, the wage cap, and all the laws that go around this coverage are all set by the state. So employees and employers together pay for this coverage. Employees in 2017 contribute 0.24% of their total wages up to a cap of $33,500. Like I said, that is set by the state, and that is for if you are covered under the state plan or you're with a private insurance carrier. The employer as well contributes to the coverage, but their costs can vary based upon the claims history for that employer. So together they are paying that essentially the premium to cover that coverage. So what we're looking at here is what's called the Notice of Employee Contribution Rates. And this is something that every employer that is covered through the state plan receives this document around the July-August timeframe. And there's some pertinent information on here that tells you, how your rate, what your rate is, and how it's calculated, and what you are, what you as an employer are actually paying. Jim, do you want to walk us through this form a little bit?
Good morning, everyone. Yeah, this form again is called the Notice of Employer Contribution Rates. If the form is issued out by the state after their fiscal year concludes. The fiscal year, as you can see up in the upper right hand corner, runs from July through June of each year, and then the state typically sends this form out in July of the following year. The form, the top part of the form gives the employer's unemployment information, and what we're basically talking about today is the bottom half of the form, where you'll see the middle, it says disability insurance contribution rate calculation. And you'll see here it basically gives the total contributions that have been paid into the state plan since the employer, or that federal ID number that's referenced on the form, has started doing business. The form also gives all of the disability benefits that the state has paid under that federal ID number. So again, it shows total contributions in, what a private carrier would basically call premiums, and disability benefits paid out, which would be claims. And then the state derives a rate, you see on the bottom, the final disability insurance rate, based on contributions in versus claims paid out. And that's what is used to form that final disability rate. And what we'll show from here is how Arch is able to offer some guaranteed discounts for NJBIA members off of that final disability insurance rate.
Okay, so what you see here is an example of an employer, what employers are receiving from this, the rates that they have with the state, going from all the way in the bottom, a 0.10% rate, and all the way at the top, a 0.75 rate. And this really is the range of the rates that the state puts out, the best being at the bottom, the 0.10%, and the highest being the 0.75. You'll notice on the right side of that column is the 0.24, and that, so the employees always pay the exact same amount. Now, employers, when they first start off in New Jersey, they are put in at a 0.50 rate, and then depending on their claims history, the state will then adjust that either up or down depending on how many claims have been submitted. So we want to just run through some examples here to so you can understand how these are put together. So we here have this company, the ABC company, 50 employees, and $1,675,000 in covered payroll. The employer here has a rate of 0.25%. So we take that rate, we multiply by the covered payroll, and we get $4,188. The employer is also paying a disability insurance assessment. This is essentially the state is kind of covering their operational costs. So these two together, the employer are paying. The employee pays what's on the right side, the rate of 0.24% multiplied by the payroll, and you can see the total employee contributions. So what this particular employer is paying out in total is the employer portion plus the employee portion equals $86.70. So that's to say that's their, like Jim said, if their premium payment to the state for that coverage.
One item for clarification, when I was talking about the employer contributions on the form, those contributions do not include the assessments that the employer paid. It only includes, in this instance, this employer would be credited with the $4,188 contribution amount. So.
Great, thank you. So we just want to look at another example, the XYZ company, a little bit of a larger company, 150 employees, a little over $5 million in covered payroll. And if we look at the same calculations, now this employer has a lower rate, a 0.10%, and we do the same math. So we take the covered payroll multiplied by the rate, gives us the employer portion. Again, the disability assessment at $1,387. And the employee, same calculation, 0.24% multiplied by the covered payroll. And then we put all of that together. We can see that this is what the total company is paying for their disability coverage. The employer piece, the employee piece, and the total, which equals $18,472. We're going to come back to this example in a few minutes when we show you what this company is like if they're moving over to an ARCH plan. So, like I said earlier, the employer has an option to move their coverage out of the state plan, and they would do this for several reasons. Number one, cost savings. Many employers can save significantly on their portion, on the employer portion of what they pay today to the state. They can also receive improved claim service, on just how quickly a claim is paid after a form is received. Also, employers will move out of the state plan to enhance their benefits. Some employers want to actually, give their employees a higher benefit than what they may be receiving through the state. So for an employer to move to a private carrier, it's really a simple process. It's a matter of, like any other insurance, getting a quote from an approved insurance carrier, holding what's known as an employee consent election, and really what that means is, since there is a contribution from the employees, it's really just going around and getting a simple majority to sign a form to say, yes, we're in and we want to move our coverage from the state to a private insurance carrier, and really just sign the application form. So when we look at this graph here, we look at why are most employers, with the state plan and have not moved over to a private insurance carrier. A lot of that is just knowledge, and is the basis for why we're doing this today. Many employers don't realize that they can move out of the state plan and shop on the open market like you do for any other insurance product. So that is a big portion of it. The employee consent that is part of the law in New Jersey, can get in the way a bit, maybe for some larger employers for moving out of the state plan to go around and receive those signatures. But, a lot of employers, like I said, you look at how many employers there are in the state, there are a lot that have successfully done this and have moved, move through to getting that consent from the employees, then moving forward to a private plan.
And just one other note on that, Tom. The employer only has to do the consent election once. Once they've done that consent election, they are able to move their plan from private carrier to private carrier. They do not have to do an election every time they, if they wish to move to a different private carrier. So that's another advantage to being in a private plan.
So let's talk about the partnership between Arch Insurance and NJBIA. Arch became a partner in September of 2016, and you may have seen some of our ads we've been running in the various publications inside NJBIA that are, basically trying to educate the members on the fact that you have this option and how you can save by moving over to Arch and the special plan that we actually have for the members. So as a member, you get special pricing, on what you are currently paying into the state today. Members also are put into one insurance pool, and this basically allows you to stabilize your rates and control costs. So we look at the whole organization as essentially one insurance policy, if you will, even though it's not. It's all individual policies. We view it that way so that if you really pull in the power of NJBIA so that we can really look at the overall performance of all of the policies together. And this really kind of helps an individual employer that if they've had several claims in a year, this prevents them from seeing their rates drastically going up, year over year. Arch also pays that annual assessment fee that we spoke about earlier. We cover the costs of that. There is no additional cost to the employees. The employees pay the same rate that is set by the state as if they were in the state plan, so their costs will never go up. Faster claim payments. So the New Jersey state plan averages about 2 weeks to pay a claim. Arch's claims, we process those in 4 days or less. This means a lot when someone's out on disability and they're waiting on this check to come in the mail because they're not getting a paycheck from their employer. And also employers who do sign up and receive a policy from Arch get access to our online reporting, online FICA reports and online claims reports. These become very beneficial when you are managing with the withholdings and running payroll reports, as well as looking at the claims report to see who's out on disability and when are they expected back.
One other note on those online FICA and claims reports. The employer is able to go in and run those reports at their leisure, and it will always give up-to-date information, I believe, through the prior business day. Real time, okay, even better. Instead of having to wait for quarterly reports to come through, which is basically how the state of New Jersey reports out their FICA deductions.
So what you see here in front of you, this chart shows you the discounts that we can apply for employers that have between 1 and 250 employees. The left-hand column, which is state of New Jersey rate, this is the rates that you could have with the state. Now again, if you remember back to that form that we showed earlier, and it had the your disability rate, you basically look on this chart here, and if you have a 0.0% rate, the next column over where it says Arch employer rate, that's the rate that we would give. Now, at 0.10%, we're going to give you a zero rate. That means we're not going to charge the employer anything. That policy will be fully paid for just by the employee contributions. So it's 100% savings to the employer. And then you can see as we go up, so if someone has a 0.30 rate, we're going to give a rate of 0.27%, which is a 10% savings off what you're currently paying. Now this can be significant savings, and keep in mind this is also, which you don't see in this chart, is also paying the assessment fee. So to see this a little clearer, we went back to this example of the XYZ company. This company has a 0.10% rate with the state, and if they were to move over to an Arch plan, you can see that we're taking the employer rate down to zero, which is zero premium payment for them, and same thing with the assessment fee. So if you look on the bottom here, the full premium that we would be receiving is strictly from what the employee contribution is. So we go from $18,472 down to $12,060. That's a $6,400 savings and 100% savings for that employer. Now, like we showed in the prior chart, your rate can be up from the best rate there, the 0.10. But these, like I said, these savings can be significant, with the plan that we have laid out here. So, how does an employer get a quote? It's really very easy. Arch has set up a hotline to call. You see here on your screen, 201-743-4205, or an email address, archnjbia@archinsurance.com, to contact our underwriting department and receive a quote. Now, the best information you can have is that employer contribution rates form. If you have this form, you have the two pieces of information that we need, which is the employer contributions and the final disability rate. Given those two things, we can supply a quote over the phone if you have between 1 and 250 employees. If you don't have that, you can still contact us, give us your employer tax ID, and then we can look up this information and then be able to provide you with a quote. So it's a very easy process, and regardless of the size of the company, it's always beneficial to go through, get a quote, know what your options are and what you could be saving off of what you are already paying today. So just real quick, the claims process is very similar to what an employee would be doing today if they went out on disability. The Arch form looks very similar to the state form, where there's 3 parts that are filled out: an employee section, medical certification from the attending physician, and the employer section to verify length of employment and salary history. Once that's sent in to our claim examiners, they work on these claims immediately, and we'll always contact any of the 3 parties back if any information is missing. They'll work with you on if there's any questions on the medical certification or any other information on there to see that we get this claim processed as quickly as possible.
And Tom, just going back to some information on one of the previous slides, I saw a recent report that came through from the state that actually said their claim turnaround service is now up closer to an average of 3 weeks. So it's gone up significantly over the past year. And again, we turn those claims around within 4 days, which is going to mean a lot to that claimant who has no other income.
Great, thanks, Suzanne. So that concludes the introduction to New Jersey disability and the Arch, what Arch is offering members. You know, just to recap, this is insurance that every employer in the state must have for their employees. 95% of the employers out there are receiving this coverage through the New Jersey state plan. Employers do have an option to move out of that state plan and shop their insurance like any other insurance you buy for your company on the open market. And Arch Insurance has offered special rates, special discounts only to NJBIA members that we are offering. And now we're going to open up to any questions.
Thanks, Thomas. Looks like we have a couple of questions here already, but I want to give everyone else a moment to type in anything they have. While I'm doing that, I'd like to take a second to remind you about the Questions tab. If you have a question, just type it right in there, and I'll make sure Thomas or Jim answers it. And a reminder about the Handouts tab. Most of the questions I get relate to how someone can download the slides, so just a reminder, look at the tab marked Handouts in your GoToWebinar panel, and they're right there. So with that out of the way, let's jump right into our first question that comes from Tara, who would like to know, is an experience rating the same thing as the final disability insurance rate on the annual form that is sent out? If not, what is an experience rating?
Great question, Tara. This is Jim. Yes, to answer your question, it is an experience rate. Basically, what is happening, except for new employers in the state, as Tom had previously mentioned, new employers are assigned that 0.50 employer rate for the first 3 years that they're doing business in the state of New Jersey. They then go to an experience rating basis, which is again claims paid under the account versus contributions that come in. So again, for any employer that has been in business for 3 years or more, they will have, their rate is derived based on the claims paid under their account versus the contributions paid under their account.
Okay. We have one from Neil, who asks, if we were to switch from one private insurance company to another, do we need to obtain employee consensus again?
Thanks, Neil. Yeah, basically what happens is once you opt out of the state plan coverage and achieve the majority employee consent, you do not have to do another election to move from one private carrier to another.
Okay, we have one from Tara, another one from Tara, who asks, how are premiums paid?
Premiums are billed by the state of New Jersey on what's called an NJ 927 quarterly report. The state basically sends this report quarterly in arrears, and they ask the employer for the wages during the quarter, and then any wages in excess of the wage cap, which for this year again is $33,500 per employee. And then the employer would pay the state based on the taxable wages, which are the difference between the total wages paid and the wages in excess of $33,500. And again, that's done on the NJ 927 report. The state bills out under the code of DI for disability insurance. That's what they're billing for, this coverage. The bill also includes payments for unemployment insurance, workforce development, I believe, are on that same bill. When Arch takes over the coverage, we file the plan with the state of New Jersey, basically telling the state that we're taking over as the private plan carrier effective, let's say, for instance, January 1st of 2017. At that point, the state approves the private plan and they turn off any billing that they would bill that employer directly from the state, and Arch will bill that employer at the end of each quarter. Again, asking for that same information. What were your wages during the quarter? What wages, how much of those wages exceeded $33,500? Pay us based on the difference of those wages. So we bill on the same cycle as the state, basically in the same format, and the state zeroes out their disability billing once the coverage comes to Arch.
One from Connie, who asks, if we have a private plan, can they set an elimination period longer than the 7 days that was mentioned?
No, they cannot, Connie. Under the state laws, Tom mentioned, the plan goes under the umbrella of the New Jersey TDB law. So we have to follow the same exact rules and regulations as any group that has state plan coverage. The state is adamant that you cannot have a plan that is more restrictive than a state of New Jersey plan. We can offer, in some cases, a 0-day waiting period, but never any waiting period in excess of 7 days.
One from Lisa, who asks, do you also offer a New Jersey family leave insurance product?
We do not, Lisa. That coverage is administered by the state of New Jersey. What we do is whenever we have a claim that we believe may go to paid family leave coverage, we notify the claimant of their right and their and what is necessary to file that paid family leave claim with the state of New Jersey. They're basically two different coverages.
I'm having a hard time understanding. Let me just get this out there, and if it doesn't make sense, we'll have Neil clarify. But Neil asks, if we are already with a private provider, can we ask provider to review employer rate?
Absolutely. Yeah, you do have the right to ask the private plan carrier for your historical premium versus claims experience, and you can request rate reductions, and the carrier will make a determination, based on your experience.
It sounds like we have a similar but not exactly same question from Shuda, who wants to know, hold on, sorry. We have a private plan and I do not know what is the rate that the state bills our private carrier. So how can she find out what the state's rate is to find out if you're better, let's say?
Well, typically what happens is once an employer is with private plan coverage for a period of, I believe it's a year, they go back to the state at a rate of 0.50 until the next review period. So depending upon when they go back to the state, that 0.50 rate may last for 3 months or 6 months. So that's the general the rating structure to go back to the state, and the private plan carrier should notify you of what your rate is with them.
Okay, we have one from Lisa here, and I'm not sure if you could answer specifically, but maybe just to get at whether or not they would be eligible. She wants to know if you have any local government employers on your roster.
Yeah, offhand, I don't know the answer to that question. Yeah, I don't know offhand of any, but we do have quite a few policy holders. So.
Oh, I mean, if it's an eligibility question, then they would. Like you wouldn't turn them away if they were a local government or...
Well, in New Jersey, certain governmental entities are not required to have the mandatory coverage. What we always suggest is if an employer is not sure if they have the coverage, to contact us and we can look into that for them.
Arlen asks, the state has moved to an online application process. Does Arch offer something similar?
We do offer claim filing by email, fax, and yes, so we have an electronic form that the employer can complete and email over to our claim department.
Sorry, I can't speak today. Rick asks, do you guys help with enrollment for larger companies?
We do. We have an enrollment service who will go out, explain the coverage to the employees, and actually assist in signing the employees up for the coverage. Again, we do reserve that for larger employers, probably at least 50 to 75 lives, because there is a cost that we incur to send those enrollers out.
One from Chris who asks, what are the other benefits for the employees other than faster processed claims?
Well, there may be some tax savings to employees because basically what happens is if the employees, they're going to pay the same. They're going to pay the same amount whether they're with the state plan or a private plan. However, if the total cost of the private plan goes down, the employee is, in essence, contributing more towards the total cost of the plan on a percentage basis, and their benefits would be taxed at a lower percentage, which means more net money being paid for their benefit.
Sounds like a sister question from Susan. Chris had asked what the benefits to the employees are. Susan says, I already have disability insurance. Why is it worth it to go with you? So I guess more of the employer's benefits, let's say.
Yeah, well, basically, it's the overall cost. We're giving these special rates to NJBIA members, but I believe, which is equally important, is you become part of a large insurance pool. So if you have an employer has a year anomaly, they have a couple of what we call maybe shock losses, long-term losses. If you're part of this pool, then it all gets melded into the total experience for the pool, so you're not as susceptible to any kind of rate increase. You're basically not out there kind of swimming by yourself. Yeah. We also have, we pride ourselves on customer service. We, all of our inquiries are answered within 24 hours, we do offer, in some cases, dedicated claim representatives who will work specifically with the employer.
One from Brian who asks, is it worth it for a small company to get a quote?
Absolutely. We encourage all size employers to get a quote because depending upon your rate with the state, the savings can still be somewhat significant on a percentage basis. We've all seen, a lot of commercials where, saving 15% off of your coverage is a pretty good return for a few minute investment to get a quote. And, in a lot of instances, we offer quotes with much higher discounts. So I would encourage even the smaller employers to get a quote.
We've got one more here from Neil, but keep them coming. If an employer is with a private plan, but either forgetting or unaware that they've switched over, and the employee files, hold on, I'm gonna do a little grammatical magic with this. So basically, he's saying if he switches to you guys, but his employees don't exactly know that that happened, or maybe they just forgot, and they file with the state, how would you guys handle it?
The state will have on record that Arch is the carrier, and they will immediately forward that claim to us for handling.
Okay, I'm going to give you guys a couple more seconds, going once, going twice sort of thing. So any other questions before I cap it off? Is there anything else you guys want to add? No? Okay. Well, that looks like about all the questions we have, so it's as good a time as any to bring things to a close. Don't forget, all of you will be receiving a recording of today's webinar and the PowerPoint slides via email. Lastly, when you close out of the webinar, a survey will come up on your screen that we hope you will fill out so we can understand how best to provide you important information in a webinar format. Our next webinar, Electricity Market Changes and How You Can Save Money, will take place Wednesday, January 25th, so you can register for that one right on our homepage at njbia.org, and don't hesitate to do that. So until next time, for Thomas Ficino and Jim Iannicelli, this is Vinny Civitello thanking you for being with us this morning and wishing you a good day.